Hey traders, Forex James here, and in this video I'm going to show you a recent live trade that I just took which yielded me an 11R return. So first let me show you the trade here. This is a verified myfxbook account, and it was a long trade on the euro dollar which I had just closed a couple hours ago. I made 110 pips and close to a 10% gain, and the trade lasted for about 22 hours. Okay, one standard lot on the euro dollar. Okay, let's now jump the charts and I'm going to show you how and why I took this trade. Okay, if it's the first time you're watching this, I'd suggest you watch the price action basics series first so you could understand how I trade with price action. Okay, it involves 4 simple steps, and step number 1 is finding direction. Okay, so I'll look at 4 time frames here just to give me a broader picture of what's happening on the other time frames that you don't see on the lower ones. Okay, it's important because the upper time frame will dictate the movement on the lower ones. Sometimes I trade off the H1 and sometimes I'll trade off the M15. Okay, when I trade off the M15, I'll usually set the charts like these. Okay, daily H4, H1, M15. If I'm swing trading, I'll move it 1 notch higher, so it becomes the weekly, daily H4 and the H1. So let's first begin by looking for direction. The trade was entered right over here. Imagine you can't see all this on the right side. Okay, and you have to ask yourself, what's your direction bias? So how do I do that? The weekly tells me that this marks the turn. Okay, so this is a confirmed bias to the upside. On the daily, however, it wasn't as clear. Okay, before this candle formed, I wasn't sure of whether this would go up or go down, because the highs here is actually lower than the highs here. Okay, which means that there's a possibility that the bears may kick in and shoot price lower to the downside to retest the lows here. Whenever you're lost in any time frame, go up 1 time frame higher. Okay, and it's pretty obvious here that the momentum has shifted to the upside. Okay, with that being said, on the H4, this marks the candle of the entry. We had an ascending triangle form. This is also another triangle here. Doesn't matter how you draw it, but the psychology behind an ascending triangle is that the bulls are continuously pushing prices higher while the bears are losing its power. Okay, that's all you need to know. And what it means is that it's more likely to break to the upside. Okay, then that's not to say that it will never break to the downside, because sometimes price makes a fake out to the upside and bam, heads lower. Okay, so that's already part number 2, identifying the current market phase, which is an ascending triangle. Okay, it's a consolidation phase. I also identify this as a range on the H4. What that means, if we've identified a range, is that price will likely be contained in the range for a while until it can eventually break to one side or another. So part 3 is looking for higher probability levels. As a price action trader, all I look at is price, and as you can see here, we've marked our charts with rectangles and support and resistance lines. Okay, so what we have here is a rally, base, rally zone. Okay, this rectangle here tells us that there was demand previously at this level, and that price may likely respect the level again should it come back. Okay, which was what it did. Having an upside bias, what I wanted to look for is a place to buy. And the only place to buy, in order for you to get a good reward to risk trade, is when the price is actually going against you. Okay, in other words, during a pullback. Okay, let's draw an uptrend here. Okay. In the perfect world, you want to enter right in the bottom and exit right at the top. Okay, for every swing that it makes. But you know that's not possible. So all we aim for is to enter after the market has turned somewhere around here. And as long as we've reached a positive reward to risk ratio, you can exit anywhere before the market turns again. Okay, as long as you can capture a big chunk of this move or even a small portion of this move over and over again while practicing good risk to reward trades, then you're making good trades. Okay, I'm showing you this because it's important to know that this is the ideal area for you to get into a long. Okay, if you enter on a breakout, you can as well, but you've already lost a whole chunk of the move here. Basically, you give up your pips for that extra confirmation of momentum. Okay, but in this case, it was a pullback trade, and I got long at this demand level. Okay, and this was the trigger for me on the M15. It's this candle here. So when price approaches this level, ask yourself what would price do at the level. There's only two things it could do, right? It could either break or it could either bounce. Okay? Sometimes it stalls for a while and then it chooses its direction, break or bounce. Right over here, besides this long wick candle, the other thing I saw was another area here. Okay, so this is what I consider to be a fake out. Okay, because imagine at one point, this candle was a red bearish candle. And for those breakout traders who are waiting for that confirmation for price to break this line here, they will most likely get short here. Okay, but instead, it reached a demand zone and reversed. Okay, that's why we have to look at the bigger picture. Anyways, I got long at this candle close. Stop loss 10 pips or 11 pips. And we rolled it up all the way to 110 pips. Okay, right at where this green line is. And the reasoning why I chose that take profit level is because this was the next area of resistance on the daily. Okay, we have orders piling up here. This is a trend followed by a range and another trend would most likely presume, right? So we have tons of orders piling up on this level, lots of stop losses, and I was pretty sure that once price breaks this level, momentum would really kick in. Hence the wider take profit level. Usually I'll be happy with a 2-to-1 or a 3-to-1. Okay guys, that's all I wanted to share with you today. Hopefully you're able to find something useful that you can use for your own trading. Don't forget to watch the price action basic series if you haven't. And if you like this video, be sure to give me a thumbs up and subscribe to my channel. Okay, thanks for watching and good luck in your trading.